Hello, I'm Mary Kurzweil with the Cattlefax Closing Bell. This week's Closing Bell is brought to you by the American Gelbvieh Association. While the beef cow herd has stabilized and we do expect to see a rebuild, that has been slow to occur. The expectation continues to be that it'll be a slow rebuild, but even in a slow rebuild, we will need to see cow slaughter continue to be small and more heifers pulled out of the fed supply to be developed. To this point, there has not been any significant indication that heifer retention has started in a big way. The latest USDA inventory data further confirmed this, with the beef cow herd down about 150,000 head at about 27.9 million head, and beef replacement heifer supplies down about 50,000 head at 4.7 million. Some very early indicators are beginning to suggest there may be some heifer retention, as heifers have begun to make up a smaller portion of feeder cattle and calf sales, running below the last few years. Still, this measure has just returned to the 10-year average pace. If we were seeing aggressive retention, we would expect to see this at the lower end of the range. Cattlefax placement data has also continued to show that heifer placements are still at the higher end of a normal range, with January estimates at about 38% of total placements. Another early indication for more heifer development is when the spread between feeder steers and heifers begins to narrow as heifer developers compete with feed yards for heifers. This has just started to be seen at the calf level as the spread between the 550-pound animals has deviated some from the 10-year average level and the seasonal trend, narrowing a bit. Still, the other weight classes would still show the spread right at average levels and even finish 2024 at the higher end of the range. The increased use of exterior in heifers may impact this data as well, allowing for a narrower spread for a feeder heifer if feeding performance is able to improve further. Bred prices should begin to incentivize a little more of this, but drought concerns and cost of capital continue to be a headwind. Bred female prices have generally moved higher with the other classes of cattle the last few years, but price increases have been more pronounced in recent months. Bred females were pretty range-bound between $2,600 and $2,800 a head last year until November. In the past 3 months, prices have increased by nearly $600 a head, near $3,300 in January. This move to bred prices indicates that the demand for females is there, but the lack of growth in the cow herd shows that the females are still not there. Turning to this week's market, the beef complex appears to be taking a breath, with softer beef prices and smaller kills putting pressure on the fed market. Light fed trade has occurred at 202 to 203 this week, which is 3 to 4 softer in the south and about $5 lower in the north. The beef cutout also moved lower this week and will continue to see some pressure over the next few weeks from seasonally slower demand. Still, smaller production will likely limit the downward move to the cutout. Thanks for watching, and remember to visit cattlefax.com to become a member and receive the latest market news and analysis.